Hey, good morning, everybody. Welcome to the Swing Trade newsletter. Anmol here. Let's get started with another edition of the newsletter. Down there on the markets on Friday, kind of a very choppy week for trading. I mean, if you really look at it, right, the markets went up here, and we, had a big gap down. So this is kind of what I was talking about last week, right? It's known as the island reversal gap, where you go up, then you gap up, and then after gapping up, you gap down. So you leave like an island, right? There's a little island in the water. So the island gap reversal happened. We sold off hard, but then this big green day came in, you know, try to go all the way back up, but then we couldn't really get going, and we're back down again into that 200 period moving average on the daily chart. So kind of a pretty decent red day on the market on spiders on Friday. But the thing is that we got support, right? You see the 50 period moving average, this green line, that's around 296 area. So that area is going to be key support, as well as this the prior low that we created right over here. So I think if the market can stay above 295, 296, then there's still a chance that we simply just do this, okay? And then we start to maybe continue higher. So as long as 295, 296 hold, I think we still have chance to go back up. But once we start breaking below 296, right, that's when things can get ugly. Because if you break the 50 period moving average then there isn't really much support until down into 276. So the areas to keep an eye on for next week would be 293 to 296. If you can hold this, still continue to go back up. Once we start breaking below that area, then that opens the door into 276, 277. So that's kind of where we're looking. And, this is more like a stock pickers and traders market. This isn't a market where you want to hold your trades too long. You want to take your quick profits and, call it a day. It isn't a market where you want to hold on because it's not trending, right? If you keep holding longs, market sells off, then guess what happens, right? The longs don't work. Same way, if you go shorts and you keep holding him, next day market goes up, short stop out. So, we got to be very careful. We got to be very nimble. And I think overall we've done a pretty good job. Although we did get unlucky, man. We did get really unlucky. But to be honest, we also got lucky last week. We'll go over that. So let's start off with the unlucky stuff. The unlucky stuff was VIR. This is a trade I called in the newsletter back around $37, $36, $37. And we got into the stock around 37. And the stock went all the way up to like 42, right? It was looking really, really good for us. I was like, okay, this is going to be an awesome trade. So I raised my stop loss to right under the entry candle's low, the green candle's low, because that was a significant candle. And look at what happened next day. Next day, it shook everybody out. Came down, right, stopped us out. So again, not a loss. We still ended up making some money on the trade because our stop loss was above our entry. But again, nonetheless, we got shaken out, and then the stock ripped to like $51. It would have been an awesome trade, but unluckily it shook us out. So be it. That's part of the game. And then we had another similar incident with this stock BNTX, which also was extremely unlucky. We got into BNTX right over here, similar pattern to the VIR on 52, 53 bucks. We got in it, and same day it went up to 59 almost, right? We were up more than 1-to-1 on the same day. I did the same thing as the VIR. I saw a nice green candle. I was like, okay, that shouldn't get taken out. I raised my stop loss to under that candle, and then it did the same thing again the next day as the VIR. Came down, stopped everybody out, took their shares, and now this thing is doing exactly what I expected it to do. So we kind of got unlucky there, on both those trades. We should have made money on both. We actually did, but obviously, nowhere close to what I was expecting to make. So that was a little disappointing, but that's how biotech stocks are. They are a little bit whippy. They're not that easy to trade as the other ones. So that was obviously unlucky. But the good news is we had another biotech that paid for all those trades, right? We had IBIO. So IBIO was another trade I called in the newsletter last week at long at $1.66, right? And our stop loss was right over here, and we got a beautiful gap in our favor. IBIO gapped up, and basically I took my profits right at, should have taken it at the open, but it took a little bit later than the open. I got like 245, 246 as my fill on that. So IBIO, beautiful trade. Gapped up in our favor, took our profits on that, and that was a nice, almost a 3-hour trade. So that was a pretty good trade for us. So, so that's the thing with trading. You keep doing your thing, That's what trading really is. I think people don't understand it. Trading is not about making the most of every single trade, right? Trading about taking your shots and following your plan. So you saw I followed my plan on VIR, teeny mini profit, followed my plan on BNTX, pretty much break even, right? Teeny mini profit. But then I followed my plan on IBO and boom, we got a brilliant trade on the IBIO. So that's what trading is all about. It's about sticking to following your trading plan. All right. That being said, let's take a look at QQQs, NASDAQ. So NASDAQ also made a new high, left a little topping tail, decent red candle today. I think the levels to watch on the Qs are easier than the spiders because you can see here, we haven't broken below that red line for a while, the 21 EMA. So, and we're right now still trading at the 21 EMA. So we need to see if we can hold 239, 240 on the Qs. If so, then there's a chance we could go right back up, just like we did over here, 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 and here, right? We could do it again if this 293 to 239 area holds. Now, if you start breaking below that 239 area, then that opens the door up to the 50-period moving average, which is hanging around about 229, 230. So that's where the next area would be. So we'll see what happens. I would ideally like the market to pull back and then maybe try to go higher or just pull back completely. The higher it keeps going, it just makes it really tough to trade, right? We did see some weakness in the technology sector on Friday. Look at Facebook. Massive red day on Facebook. Went down from $233 to $216. That's a pretty big red day. And Facebook also has broken a support level on the daily chart. So Facebook, I mean, if tomorrow or Monday, gives us like a nice green candle, and then the following day, I mean, I'd be open to shorting that, if that's the pattern, if it sets up for us, right? So we'll keep an eye on that one. I do have a bunch of new swing trades for you guys, but let's kind of go over our open trades. I'm still in this Sage, SAGE. I got into that, still in it. And I'm going to raise my stop loss on the Sage. I don't think, I'm going to raise my stop loss to $39.60. So raising the stop to $39.60 on Sage, and looking for it to get back above 44, and then hopefully we can get a nice move higher, right? One stock that also shook me out was PTE. This is a stock I got into right over here, about $1.40. It went up to $1.60. Pulled back, stopped me out, but then look at that beautiful candle on Friday, nice green candle on volume as well. So I think I'm going to get back in this. So I'm going to get back in this. The entry is going to be $1.40, $1.40, with our stop loss under 90. Actually, stop loss I'm going to put under $1.04. So $1.40 by $1.04 is the stop loss, and the target's going to be this 200-period moving average, about $2.15. So that's going to be PTE. That's going to be a trade I'm going to be looking to get back in. Another one I've been watching is Rite Aid, RAD, if it gets back above $17. This is another one I do like on RAD, so I'm going to be calling this one as well. So the entry on RAD is going to be long above $16.90 with a stop loss at $14.16. Okay, and we're going to look to see if it can get back into 23 or 24. So Rite Aid, going to be a new trade for us here in the newsletter. I have a few more trades I want to call. The next one that I am going to be calling for the newsletter is, let's see here. I had a few that I'm watching. Let's see. So the CAPR is still valid. So I called the CAPR last week. It never triggered for us. I'm going to keep this valid just for the new stop loss. So the entry on this one is going to be $5.46 as the entry. Stop loss is going to be $4.54. Okay. So the CAPR is still valid. Again, I'll post the new numbers in the newsletter. And also, guys, when you're talking about trades, right, always look at the numbers in the newsletter, right? Because I might just quickly take a look at it and give you guys some numbers of where we're going to enter and stop loss, right? But the real numbers will be in the newsletter, okay? So the text portion of that, that's what you want to look at for entries and stop. All right, here's another one I'm going to call AYTU, Ayatu Biosciences. Again, another biotech stock, but what I like about it is, it's got this really compression pattern going on. You see that little compression going on. So I think that if it gets back above Friday's high, right, I think it could really make a move or maybe even gap up one day. So I'm going to do AYTU long above Friday's high. So the entry is going to be $1.71, okay? And the stop loss, I'm going to put under Friday's low. So the stop loss is going to be $1.54. So $1.71 by $1.54 will be the entry on AYTU. There's a few more that I like that I'm not calling, but I'll just give you guys as an idea. I like this EOLS if it gets back above $6.20. So that's one I like, but I'm not calling at the moment. Another one that I like is ATRO. If it gets back above $11.35, that's a good looking one as well. And another little penny stock is TRXC if it gets back above 80 cents. That's another interesting. But these are ideas. I'm not calling these right now, but definitely something to keep an eye on. Here's another one that I like that I'm going to call is CTIC, CTI Biopharma. So the entry on this one is going to be $1.34. Okay, stop loss is going to be $1.12. So CTIC, what I like about it is, look at the monthly charts and the weekly charts and the daily charts. Overall we've got this pattern that we broke this downtrend and we're trying to get back up higher. So I think if it gets back above here, it might make an attempt to test these highs. So CTIC I'm going to call. Another one I'm going to call another biotech stock, just because those biotech stocks are looking hot right now. They're looking like they're going to be the ones that are going to try and make a move. So here's another one I'm going to call KDMN, Kadmon Holdings. Fun fact: I was actually there for the IPO. KDMN, yeah. So when they did the IPO in the New York Stock Exchange, I was actually there. I was on the floor of New York Stock Exchange with Kevin O'Leary from Shark Tank. He was there too. And we saw the IPO of this stock KDMN, which hasn't performed terribly well. Because when we were at the IPO, it was at $11 and hasn't done much well since. But on the monthly chart, what I'm seeing now is you see this little pattern forming, this trend line. So I think if we get back above this trend line, we can make a move to go higher. So this is one I'm going to call above $5.50. Okay, so 551 long. And our stop loss, I'm going to put it under $5. So $4.98 is going to be the stop loss on KDMN. That's also going to be a new trade. Okay. A few more that I like. OPK, Opco Health. This is one that I like as well. I'm going to call this long above $2.90 with a stop loss under $2.50. Okay. Again, I like the weekly chart. Weekly chart's been downtrending, but you have this resistance at 290, which if it breaks it, I think it could try and make a move to 450. So that's another one I'm going to be calling. Okay. All right. I have another one. Phunware. PHUN. Fun. So this one I'm going to look to go long above $1.53. Stop loss under $1.17. I just think that, if it can get back above this resistance, we have this little consolidation here. Get back above there, I think we could start making some moves to the upside. So Fun is another one I'm going to call. I have a few more. So yeah, get ready. I got a lot of long trades. So this one I like is PSTI, Pluristeam Therapeutics. Again, another biotech stock. So this one I like, we have this downtrend line that recently got broken. We have a little, kind of an inside candle situation going on. So I think if we get above Thursday or Friday's high, so $9.36 will be the entry and $8.39 will be the stop loss, about $1 stop. I think it could go higher. Monthly charts potentially setting up a, kind of like a 3-bar play if you really, really zoom in. So that's kind of what I'm looking at on this PSTI. Okay, so that's going to be another one. A few more. Again, not all of them are going to trigger, so don't be scared, right? Because you're like, oh my God, there's so many trades. Yeah, not all of them are going to trigger, right? Some of them are going to end up canceling. So this is one that I find interesting too. Pulm, PULM. If it gets back above $2.06 with a stop loss under $1.70, Pulm also, has this consolidation on the daily time frame, right? If it gets above this resistance area, I think you could try and make a move to the upside. So that's going to be another one, right? Here's another one I like. This one I'm not going to call, but I'm going to give you guys an idea, is SNES. SNES, if it gets back above 257, could try and make a move higher. Keep an eye on that. Here's another one that I'm not calling, but an idea for you, STIM. STIM, if it gets back above 235, looks pretty interesting. All right. And then here's another one. This one I actually like, and I'm probably going to call this, is XNET, XNET. If it gets back above $3.95. So $3.90, stop loss like $3.30. It's sitting under this 200 period moving average for a while. So I think if it gets back above this 200 period moving average, it could try and make a move higher. The downtrend line is also right about there. So I think if you break that, we could start to make our move to the upside on XNet. Okay, so that's one I like on the long side. I do have a couple shorts as well. One of them is BSX, Boston Scientific. So Boston Scientific I like under Friday's low. So let's say 33.08. Stop loss is a big issue on this one. I mean, to be honest, we don't have a place where we can give it a stop loss. We have to give it basically a pretty big stop. So I'm going to give it a stop loss above 34.80. Okay, so yeah, I'm going to give it a stop loss, like actually 35. So 35, I'm going to place the stop loss, look to short under Friday's low on BSX. We have a little weekly chart sell set up and a monthly chart sell set up and a daily chart looking like it wants to roll over. So that's one I really like as well on the short side. Another one I like on the short side is Lululemon, LULU. Look at that monthly chart, crazy extended. Weekly charts really, really extended. And then the daily chart's extended, but now it's also below all the moving averages. So I think if it gets back below here, right, with a stop loss, maybe if you put it a little bit up there, potentially works its way down to the 50-period moving average. So that's going to be another short idea for me on Lululemon. Okay, Lululemon. All right. Another one I like on the long side, but I'm not calling this right now as an idea, is ARWR, another freaking pharmaceutical stocks. But if it gets back above Friday's high, looks like it wants to continue its way higher. Not an official call, just an idea for you. So, by the looks of it, a lot of trades this week, right? I mean, we took profits on IBIO. We still got a couple, still got a couple open trades. We're in the Sage, which looks pretty good. We're also in this ENLV, another swing trade that we're currently in. I'm going to raise my stop loss on this as well. So check the newsletter for that. We're in the ENLV. So those are the two open trades we're in. And I have a bunch of new ones, right? I got PTE, we got RAD, we got this CAPR, we got this AYTU, we got the CTIC, we got the KDMN, we got an OPK, we got FUN, right? We got PSTI, we got PULM. Oh my God, that is actually a lot now that I think about it. So those, and on BSX and Lulu too. So we got a lot of swing trades this week. So again, action-packed week it's going to be next week. And again, just remember the newsletter rules, guys. If a trade that I call takes out its stop loss before it actually triggers, just automatically cancel that, okay? And then the next thing is that if a trade that I'm calling is gapping up above what was supposed to be our entry, don't buy it at the open, right? Make sure you're using a limit order to get in. You don't want to pay more than a few cents for a trade, right? So the way I usually think about it is, let's say if it's $1 stock, $1 to $5 stock, I give it about 10 cents or so, right? If it's stock which is $5 to $20, I might give it 15 cents to get filled, right? If a stock is, let's say $50 to $100, I might give it 30 cents to get filled, right? Stocks over $100, I might give it 50 cents or so, right? So you got to give it some limit, but again, don't chase the stock, right? Because I know a lot of people, those who've been in the newsletter for a while, they got the IB on the way down at $1.66, and we got out nicely. Some people got in right at the open, so you still made money on it, but again, you made less money because you bought it right on the gap up. So whenever anything is gapping up, make sure you use a limit order, right? A few cents above our entry is fine. If it's only gapping up, let's say 5 cents above what was supposed to be an entry, then it's fine. Then you can buy it at the open, okay? That's what I'm trying to say. Just use a little discretion there. If it's only gapping up a few cents above the entry, just buy it. It's not a problem. But if it's gapping up like way too much above our entry, then you want to use a limit order. All right, so that's kind of where we stand here. Let's kind of take a quick look on the market internals using the McKellen oscillator on the spiders. So here's what's interesting, right? On the way down on Friday, the McKellen oscillator is actually approaching that oversold reading, right? So I think market is probably going to next week try and go down to here. Internals will go oversold, and then maybe we bounce right back up again. So we'll have to wait and see. But internals are at a oversold reading. That means you want to be cautious on the short side at this point. Doesn't mean you can't go short. Just means you want to be a little cautious. Okay. So that's the S&P 500. Talking about gold, yes, last week I told you that gold is probably going to try and go higher, and there it is. Look at gold. Moved up from 164 to 167. and it's working its way up as for the newsletter. What's interesting here is that the McKellen oscillator on the gold is still oversold while we're going higher, which is a really good sign. So that tells me gold might have more upside in the following weeks on the GLD. So definitely keep that in mind. Same thing with the silver. You want to definitely keep an eye on this trend line on the SLV silver, right? You start breaking that trend line, get above $17. I think silver is going to try and make a move to the upside as well. So some of the things you want to keep an eye on. All right, so that'll do it for us for this week, guys. Just kind of a choppy week. So I'm not really doing a detailed newsletter because it's hard to say, where the markets are headed. But commodities are heading up, and you take a look at the U.S. dollar. U.S. dollar still continuing to go sideways, so that's a pretty decent sign, right? Talking about the financial sector, still seeing weakness, much weaker than any other sector here. As it relates to the market, financials are really weak, which is never a good sign for a healthy economy or the market. So, we want to be cautious on that front. Small cap sector, IWM, still much weaker than the market. However, recently, if you notice, the spiders have almost come back down to test these lows. IWM has not. So, last couple days, small cap sector has shown some interest, which is actually a good sign for the market because you want to see people be willing to take risks. Okay, so that's kind of where we stand at the moment. Chart of the Dow Jones looks pretty much like the spiders. So what will be interesting to see is if technology can hold its gains, right? Because what's been keeping this market up so long is actually the technology sector. Stocks like Apple, Amazon, Microsoft, they've all done really, really well. Facebook, Shopify, Spotify, So it'll be interesting to see what happens in the market because Friday we saw some big weakness on some technology stocks like Facebook, right? Microsoft closed red for the day. Amazon, closed red for the day. Netflix, big red for the day as well, right? Amazon, Google, big red for the day. So it'll be interesting to see because if the technology sector starts giving up its gain, then that's going to be the catalyst that's going to bring the stock market down. But if it's just a one-off, one red day, profit taking, and we go right back up, then that is going to be a strong sign for the market. So we will take it day by day, guys. Overall, I think we're still doing really, really well in the newsletter. We're beating the market returns by like 4 times the market returns we're beating for the year. And we're doing a pretty good job. And guess what? It's only half the year. Still got half the year to go. I'm confident we can probably close to double the returns that we have right now. So take care, everybody, and I will see you guys in the next edition of the newsletter. We got a lot of trades this week, so I wanted to give you guys the time to make sure you can place your orders correctly and things of that nature and get ready for the week. So trying to get the video out a little bit early to you. All right. So take care, guys. Speak to you guys in the next edition of the newsletter. Throughout the week, I'll still keep you posted with any updates.